Welcome to the Swiss Wolf. This is Steph. Today I want to cover a question because I've seen that a lot of people are talking about a crash coming in the market, that this is the top, we're going to 50K, 60K, or whatever the amount that they think it's going. And that raises the question, then why haven't we crashed yet? Why are we not going to these levels right now? If we look at the previous tops, we can see that when the top happened, it happened pretty quickly. It didn't take a few months, it was only a few weeks before we saw those massive red candles. And if we look right now in this cycle, something that we've seen already 2 times, it's that we're spending a lot of time in that consolidation zone right there. It's been since May 2025 until today that we're spending all this time in here, and it's almost like whales are telling us, don't worry, you have time to get out of the market before we go down, and then we're going to go into the bear market where you'll be able to buy in again and all make money. But is that really the case? And I'm not talking about just a pullback. Why isn't the market crashing to the lows that everybody expects? Currently, the fear and greed index is around 25. Depending on where you look, it's 24, 26. So I took 25, the middle range, and we're basically in fear. So if that fear is valid, why are we not crashing? So I'm going to tell you what I think about the chart, how it's looking so far, and also a few data points that support that potential scenario. And one thing I really want you guys to understand is that I will never tell you something is coming for certain. I will always say the likelihood of this scenario happening is higher than the other one, and this is why I'm going with X, Y, or Z. Because at any given moment in the market, nothing is for certain. We can always at any moment go up or down. The question is, how likely is it that we're going into either direction? And based on that likelihood, we take a decision, but always prepare for the other scenario in case it goes against us. For those that watched my video on Sunday, I said that the weekly close was very important. And you can see that we closed above the wick, which was very important. This is not a clear break of structure. And this level here held very well. It was a very strong support. I'm very pleased with the way that the weekly candle closed. And this week will confirm if that support is going to hold or not. If we see a move lower, then it will mean that it's slowly creeping lower, which is not very positive. But if we see a bullish candle, then it's going to be adding towards the more bullish outcome than the bearish one. And you can see that we're forming a falling wedge right here, which we have been already the past 2 times we had those pullbacks. And the outcome in both cases was very bullish and a new all-time high. And the difference in this one is that it's more compressing than these two. These were wider. And usually when something compresses towards a certain point, the move is very explosive. Today being Wednesday, you can see that in all of those days since the weekly close, the market wasn't able to follow through with that bearishness and move price lower. Of course, it could still come towards the end of the week, but so far that bearishness that we saw right there found support, slowed down, and we're seeing a reversal. And on the 4 hours, we can see that we had a double bottom, a break, and now we're retesting. We came a bit lower, which is fine, but so far that support is holding, and a double bottom is a reversal pattern. So H4 is turning bullish, and as soon as we break this range right there, we're going to be bullish also on the daily. And keep in mind that as long as we don't break below this level, we are neutral. We broke this one level, so we're in the ranging zone. If we break above, we're bullish. If we break below, we turn bearish. And so far, because the high time frame is very bullish, it's more likely that we continue this trend than completely turn the other way. Because in any chart, the trend is always your friend. If you try to go against the trend, then you have less likelihood of being right than if you go with the trend until you see a very clear signal that we're turning the other way. The European session bought Bitcoin, which is good. We saw an early sell-off, then a buy-in. We could see some sell pressure when the US market opens, as it happens quite a bit of time. So we could have another further pullback if we don't break this level, and then a reversal. But only once we break above this level on H4 and this level on the daily will we become fully bullish. And until then, we can still range for quite some time in here. Macro events can, of course, help if we have anything that is very bullish, like the government shutdown ending or any trade deal, we could just smash through and become bullish straight away. And that goes as well for the other direction. If something comes out very bearish, then we could also just smash through. But as long as we stay above this level here, I'm not going to hedge my portfolio or do anything in the market because the most likely outcome right now is bullish. That sentiment is also shown in the Bitcoin dominance chart, which closed like a doji, which shows accumulation. And if we would have had a huge fear in the market, we would have seen big red candles or bullish candles like we've seen previously when we had some crashes, but we're seeing just a consolidation. That usually indicates that alts are being accumulated, and we can see that in different coins that are popping here and there, basically. I'm also going to show you some data that adds another confluence as to why it's more likely that we find support around here than fall down. The first one is how much Bitcoin is left on exchanges. That is basically the liquid supply, and that could be bought in case spot buyers want to get some Bitcoin and get it on their ledger. Because price is determined by supply and demand, and that is valid for spot and for futures. When a long or a short is taken in the market, it adds pressure. The same with spot. If a sell or a buy is placed, then it adds pressure in either direction. And so far, we've seen that supply is drying up on exchanges. The ETFs have had a bit of a sell-off, but accumulated 500 million Bitcoin yesterday. So that shows that buying pressure is coming back. We're seeing a very high interest in the spot trading. And with the drying supply, it's very likely that we see a price appreciation rather than a fall to a new low or the bear market, for example. So the first reason is drying supply. The second one, what is happening is with this supply, it's moving into accumulation addresses, which are addresses that have been accumulating for a very long time and not selling. And I usually take the inflow moving average, which doesn't give the information just on one day, but on an average. And this tells us, well, on average, what is happening. And we're seeing an exponential growth. Basically, whales are accumulating. Now the question is, where is this Bitcoin going? Well, in those accumulation addresses, and you can see it reflected in the balance here where we are growing exponentially. It's not a slow growth, it's really an exponential growth since this year. And we're reaching levels that we haven't reached since, well, actually ever, not in 2017 or in 2021. So those accumulation addresses, which are addresses that never sold, just keep increasing their holding. And whale addresses, which are addresses that hold over 1,000 Bitcoin, excluding exchanges and mining pools, have also started accumulating again. We saw a bit of a sell-off around here earlier this year, but now they're accumulating again. And you can see that in the previous cycles when they started selling off for a very long time. Afterwards, we reached the top and then started going into the bear market. It happened in 2017 where they started selling very early. 2021, they started selling also very early before the second top. And this cycle, we had a bit of a pullback, but that's something that can be compared to the pullback we had earlier 2024 and we also had in the previous cycles where there's a bit of selling and then we just keep continuing. So if price is falling, then who is selling? If spot is mainly buying, if supply is drying up, then why are we going down in price? And that raises the question as to why are we going down then? If whales are accumulating, if supply is drying up, then why are we going down? And the main reason is because this is futures driven. This shows the futures retail activity. And here you can see that for the past 2 months, there is a lot of retail activity. We're not in an extreme retail activity, but retail is very present. And in the past couple weeks, there has been billions in liquidations happening. So while retail is handing over their spot, basically the actual token, they're selling it, they're trying to catch the small moves by trading leverage and get liquidated all the time, which is making whales and market makers a lot of money because they're profiting from this. And what tells us that we're seeing all those liquidations is that we see the open interest, which took a huge dump when we had the liquidation event last month and just keeps falling. So those open trades just keep getting liquidated and being closed, and retail is losing their money with trading leverage. So we see retail activity very high on the future side, but very low on the spot side. They're almost non-existent, trying to catch all those small moves on Bitcoin using futures and not buying the actual coin. This is why it's very important when you do leverage trade to have a very clear strategy, a very clear stop loss, and knowing how much you're going to risk ahead of the trade and not just try to make as much as possible in one single trade. Because some get lucky, of course, but the sad truth is that most, without a strategy, get completely liquidated in their trades and lose everything. There are two more data points I would like to share. The first one is stablecoin supply ratio. So this ratio tells us how much stablecoin is available, like USDT, USDC, relative to Bitcoin. And when the ratio is low, that means that there is more stablecoin available than Bitcoin, meaning dry supply is available, liquidity is there to be deployed into either Bitcoin or alts. And you can see that historically, when we had those very low levels right there, it was a huge turning point. It doesn't mean that we're going to turn straight away, but historically it shows that when we were that low, especially at this high price, it's more likely that we're going to rise quickly after than drop. So this is just another confluence adding to the fact that it's more likely right now that we turn bullish rather than bearish. And the last one is how much is currently open in the market. And without a surprise, of course, we can see that there's almost 20 billion that can be liquidated at 117,000 and about 5 billion at the 97 mark. So the market is mainly short on the future side, but mainly long on the spot side. And as you could guess, it's more likely that spot is going to win with the direction than futures. Because if right now they're not selling their spot, that means that they believe in the price appreciation. And once future traders are done selling, done trying to catch the top, thinking that we're going to crash to either 50K or 90K, then it will be only the bullish pressure that is left. And once they're done accumulating those shorts, it's more likely that we go up rather than down. So to recap, spot traders are bullish, future traders are bearish. And I'm not saying that we're not going to see a further pullback, a little bit more bearishness right there. But the most likely outcome right now, based on all the data on the chart, is that we're going to see an upwards movement after a possible more ranging right there. We still need to see some fundamentals come out. CPI is coming out, PCE is coming out, and some members of the Fed are even calling for 50 BPS cuts in December, which would also be very bullish, considering that there's a lot of liquidity that is on the side right now, not being invested. I know it's very hard to navigate these markets, especially when there is so much uncertainty, so many different opinions in the markets on social media. And this is why I like to keep it simple. Have a clear level where it's bullish, a clear level when it turns bearish, and then depending on where we go, then I decide, okay, here I'm going to hedge or I'm going to hold and just wait for the market to do its thing. If you guys want to know how to hedge and how to use options so that if there is a huge crash, we can benefit from it, then you can join my private community. I'm going to share an options course and also a tool that can help you determine exactly how much money is needed to hedge your portfolio and not leave the market without anything. Thank you for watching. Really appreciate your support. And remember to keep it simple. We trade scenarios, not certainties. And don't forget to subscribe if you want to see more updates like this, where I'm going to give very clear zones where to take action based on what's happening in the market. Bye, everyone.